So my covered calls did their thing. My shares are gone. Fresh firepower to deploy. Let me show you what I'm doing, guys. My name is Pete. If you're tuning in for the first time, you can find my broker statements at onlypeterpru.com and optionsellerschool.com. And every single person that comments down below in today's video is going to get the options sellers planning template. This is perfect for those of you that are new to option selling or even veterans to get a good structure on Sundays going into the trading week. So drop a comment down below. I'll personally send you the option seller planning template. And while you're down there, hit that like button and that subscribe button. But guys, I hope you are having a God blessed day. Let's get into today's video because my shares have been called away. As you guys are follow along on our public portfolio, you saw that I had an $8 right covered call on Snapchat that was expiring yesterday. And as you see here that my shares were sold, you can see October 4th sold 100 shares of Snapchat at $8 filled, and I was given $800. Let's paint you the full story here on our trade log. Those of you that already have the trade log, you'll see that I added this already in there for you. And if you want my full trade log, just go to the first link in the description of today's video. You'll learn more about what we do here. And just for taking a quick call with us to learn about what we do, no high pressure sales tactics, I'll give you my trade log for free that you can follow along and copy for yourself. But you could see here on my line right here, you could see I had my covered call on Snapchat, was expiring on the 3rd, right? I initially collected $17 of premium, a little over $17, which was about almost a 3.5% ROI. And I got a nice little $50 appreciation profit on that trade for a total return of 9%, 8.9%. If results vary, not financial advice. But with that said, I am very, very pleased because now our total gains on this public portfolio in just a short few months, baby, let's go $540 already, just at almost a 3% average return per trade. Very happy, little aggressive. I'm not going to lie. I like to usually be at that 2% range, but since we've been playing Snapchat here and it's been really fun for the past few months, obviously some of my trades have been a little bit more aggressive than I normally like to go. Okay. Remember, as option sellers, we do take on risks. As much as we think it's free premium, all the premiums raining on us, it ain't the case, fam. Guys, we are taking on risk. We are essentially selling insurance. Now, I think selling options is the best trading strategy, and it's my God-given duty to share it with as many people as I can, especially my children. This is one strategy I wish. The more you don't do this strategy, honestly, the further you're delaying potential retirement income, an easier way of wealth building than just leaving your stuff in like a high-yield savings account where they pay you 4% a year. Let's go. What's next? Obviously, Snapchat trading around 850, right? So my shares got sold. I missed out on some games. I don't care. Guess why? Because I treat this like a business, fam. I am different than every single person that you probably see on YouTube. Call it because I've been doing online businesses now for well over a decade. I treat my option selling like a business. What's the purpose of business? Who knows? Drop a comment, right? Who knows what the purpose of business is? To make a profit, right? And what does a business do with that profit? They reinvest it, right? They reinvest it into employees, advertising, whatever they're doing. What am I doing? I'm locking in gains, making a profit, even though I might miss some on the top, right? I definitely missed on some extra gains with this. I could have sold it at 850, but I forced myself to sell it. I forced myself to take a profit, and then I reinvest that into different opportunities, right? So with that said, obviously right now, Snapchat's riding hot right now. We are at the top Bollinger Band area, really working our way now towards our 200 and 300 day moving averages here of 960 and 909. All well and good. I'm going to keep Snapchat in the back pocket. You guys already know this thing has been moving like crazy. So I'm definitely going to even be paying attention to it this week, especially because if this thing comes down 10%, which it very well could, I mean, this thing has been riding crazy with volatility, which I've been really enjoying. But with that said, not planning to do anything on Snapchat. Where's my next move? We got two, but you've seen on your screen right now who might be next. We getting back into it, guys. As you know, when I first started the portfolio challenge, where did we go? One of my favorite stocks of all time. I hate to even beat, maybe not all time, but with that said, SoFi. We getting back into SoFi maybe here. Okay, we're watching it, right? We're watching it because if we continue to work our way down towards that bottom Bollinger Band of 23, I would like to start looking at things close as I can to the 200 and 300 day moving averages. Listen, SoFi's been riding hot right now for the past few months. You guys have seen on the public trade log, I have not been doing much. I had some covered calls that I was rolling out, eventually sold my SoFi shares here for probably our top trade of a just about 24% return on our trade right there. Now that's all well and good, right? That was when SoFi was trading around 1750 just 2 months ago, about 3 months ago. With that said, SoFi's been riding hot, but take a look at what we're seeing here, right? If I just go over the 6 months, we have finally, look how long guys, look how long it has been, nearly 6 months. 6 months since SoFi has dipped below the middle Bollinger Band area. I believe this is the large indicator of a greater pullback coming. What is that pullback going to be? Man, I wish I knew, right? I have no idea. Nobody knows. But with that said, this is a very big signal in my mind to be paying attention to this week, especially on SoFi. We have not seen this drop below this middle Bollinger Band area in like I said, about 6 months. Okay, so if this continues to work towards this bottom Bollinger Band, what's my play? I'm not looking at 20s. I'm telling you right now, I'm not looking at 20s. I'm looking at below 20s. I'm looking closer to the 200-day moving average of 17-ish. I know that's probably going to be a long shot, but if we continue to work our way down, we can see that pretty fast. We went from 30, we hit that 30 and just saw a ton of resistance at that 30 and just kind of been working our way down ever since. So I can see this getting back down towards that 17 level. A lot of you have asked me, hey Pete, where do you see SoFi coming back to? I know that might sound crazy, but I do see it come back to that like 16, 17 level. And that's where we will be jumping back in on the public portfolio here. Okay, that's play number one. So I'm going to be monitoring that. I'm staying patient though with this one. Okay, I got to stay patient. I'm excited about it because I do love SoFi. It's in my weekly buy. All right, I'm very bullish on SoFi long term, but from a business perspective, meaning from option selling perspective, from a business and profits, it's a little high risk right now because it's been riding a little bit high. So where am I looking? I'm looking at the beat up assets, right? I'm looking at the beat up stocks. I'm looking at the falling knives that I believe a lot of the market isn't necessarily paying attention to. And where am I most likely going to be doing something? I'm going to jump into American Airlines a little bit more. Now, we do have a cash secured put right now on our portfolio. As we see right here in our positions, we have a $12 cash secured put in on American Airlines that is expiring on October 17th. I hate to jump in more, but the premiums, they scream into me right now. They're better than even Snapchat on American Airlines. And for me, I love American Airlines. For me, guys, is Old Faithful. This is the one that I learned how to sell options on over 7 years ago. So whenever I need it, it's there for me. Right? But with that jokes aside, right? Look at this play on American Airlines I have. Obviously, it's risky. 3.36% ROI on my collateral. 1,200 locked up. $40 on it. That's a massive risk. I know that, right? So you have to understand when you're shooting for those 2.5, 3, 4, 5, 6, 10% ROI collaterals in 30-day periods, you are taking massive risk. And this was actually just under a 30-day period. So that's a huge return, huge, right? But with risk. Risk, always remember, risk. Everything is risky. You got to account for that for yourself. With that said, I'm already in the 12s. I want to see if we can get a little bit more of a pullback here. It's going to be between those two plays though, right? So American Airlines, I'm primarily looking, I want to get the 11s or the 1050s. 1050 might be out of range right now, but with that said, I think because the premiums are so juiced up, even at the 1150s and 11 ranges, I might be able to get a 1050 in for like a 2% ROI. And that is 100% fine by me. With that said, is this like a smart play in terms of diversification on the portfolio? Hell no. I'll be the first one to tell you that, right? Absolutely not. But the thing is, you got to get scrappy when you're working with a small portfolio. That's my personal opinion. I have no idea even what I'm talking about, okay? Do your own research. But with that said, whenever I've always like scaled or started from a small portfolio, you got to get scrappy. It's just the nature of the game. The thing about selling options, guys, y'all know this, it takes money to make more premium. The more money you have, the more money you can make with premium. Welcome to reality, folks. That's That's just the way it is. The more money you have in a a high yield savings account, the more interest you're going to be paid. The more you can put it into T-bills, the more it's just welcome to the world. Some of you like argue with me by the fact of like it takes money to make money. You're wild. You are crazy if you don't believe it takes money to make money. This is the reality that we live in. Okay. So the reality with option selling is we're not gamblers. We're setting ourselves up at the house. So even with a smaller portfolio of 5,000, I'm setting myself up with wins that I can compound over and over and over and over again. And I'm focusing on treating it like a business, meaning locking in gains when I can, moving my positions around whenever I can, in order to take a profit and to continuously have my $5,000 deployed. Right now, I have just around $3,900 deployed, right? So for me, this is going to be a perfect setup if a big American Airlines pullback, all right? So also, obviously, with SoFi, I'm a little bit more patient. Obviously, that's going to be, a $1,700 one. So for me, if I would just need to see that pullback way back towards that $17 level for me to be able to even jump in with this portfolio. Guys, I hope you enjoyed today's video. Make sure to drop any questions that you have down below. I will personally send every one of you the option sellers planning template, perfect for a Sunday routine for you. And if you want my full trade log plus additional trading on the Ark Options Strategy, which takes the wheel to the next level, and learn about our mastermind and mentorship program, which is filled with incredible option sellers sharing all insights that they're doing, pre-market calls every single morning with me, all the courses, training, tracking tools, all the things that you need for option selling. Click the first link in the description of today's video just for learning more. I will give you my live trade log link. Guys, remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.